Yep.
Hello, everybody. Oh, Mia's just arrived. Should we
Yep.
let her in?
Just putting her in now.
Welcome, everyone. So, my name is Kate de Jong. I partnered with Dee to bring this podcast series to you because we are both very passionate about helping small business owners build wealth, well, people in general. But I'd love to know, John and Ali, are you both in small business land? Or,
Me, okay, I'm the only John. Right.
yes, hi, John.
Yes, I've had a year off and sort of restructuring would be the most
Right.
accurate term. And
Mhm.
so this is part of it, being introduced to Rachel and then also about to
Oh,
sort of embark on a new chapter and angle around small business and art.
perfect. Well, you're in the right place.
Yeah, I hope so.
Yeah. And Olivia, how about yourself?
Oh,
Yep, you're on.
hi.
Liv.
Yep. I actually I work alongside Dee
Mm,
and I work alongside Rachel. I was a client of both and still probably am. So I get the best of both.
yeah.
I help and learn every day basically.
Mm.
And I'm just setting myself up for the future as well. Just learning everything that I've left to the last moment.
Yeah.
So
You and me both,
teaching.
which was part of my motivation to start
That's
learning all
right.
this stuff. Yeah.
Trying to
So,
catch up.
well, welcome. And hi, Mia. You've just joined us. Lovely to see you. And Ali, how about yourself?
Yes, small business, definitely. Always have been farmers most of our lives,
Mm,
and then got out of it because it was such a struggle. And that's when, fortunately, gave us the funds to be able to buy a bit of crypto. Thank you, Dee. She coached us along and amazing, really, really big help. And then she introduced us to the beautiful Rachel. So Rachel's been helping us for the last 6 months as well. So it's given me lots of confidence, me and my husband. My husband does all the work and I just work with the money.
yeah, but you're also here because you're keen to know it all, know more and
Much more,
support
yes.
this journey. Yeah, fantastic. Well, welcome. It's really nice to have you all here. And we do have people that have requested the replay, so we will be making sure we send that out to you as soon
Absolutely.
as we can. Yeah. So the reason Dee and I partnered together to bring this series to you, oh, Michael, I missed you. Sorry. What's a little bit about yourself?
Um, Hi. Yeah, well, I spoke to Dee about a couple of weeks ago.
Ah,
Yeah, just small business, run it with my dad, and no investing background before last year. So sort of just learning about it for about
mm,
12 months, and yeah, sort of just setting up all the structures now with within the trust and the PDY LTD and
mm,
SMSF and all that. So
mhm.
been a little bit busy the last couple of months with that, but yeah,
Yeah.
it's pretty much where I'm at the moment.
Great. Well, you are also very much in the right place this morning, so welcome.
Awesome,
Nice
thank
to
you.
have you. Yeah, so yeah, as I was saying, Dee and I partnered together because we have been working with small businesses for a long time, and I definitely noticed, firstly, so I help people start and grow businesses, and I notice financial illiteracy is a big problem. So a lot of people start businesses and just really have no idea how to manage finances or be disciplined with finances and how to grow a business in a way that actually leaves you with profit at the end. And then once you've got the profit, how do you then start building wealth? But most of my clients don't even get to that point because some of the stats are pretty sobering. I pulled some of them up. So only 1 in 3 Australians have enough superannuation to retire comfortably. And couples need 690,000 minimum, as I'm sure all you experts in the room know, and singles need 595,000 in their super fund to retire comfortably. And most, yes, obviously 1 in 3 don't make it there before retirement. The other stat is that 1 in 2 solopreneurs are skipping super contributions entirely, and I can attest to that, that the majority of my clients, when they are starting up, obviously the first 5 years is tough, but even trying to get them into the habit and discipline after that of paying themselves super. Now, obviously, that's changing with the government rules, making that compulsory. So, and I'll let you, the experts, talk to that. But I guess from my perspective, what I realize is that many small business owners are not focusing on wealth creation. They're focusing on generating revenue, which is great, but they're not focusing on keeping that as profit and then investing it into wealth. And so they're getting to the end of they'll sell the business and realize they have nothing to actually retire on. So that's why I'm passionate about helping my clients understand more about this. And I met Dee a year or two ago in Queens, when she came over to Perth, and we just hit it off straight away. And I've been crypto curious for a long time, so she's been helping me as well. So we have so much brain power in the room today, and we're going to start by giving a very short overview of each of the different topics that we covered in the series. The first episode that we did was with Sam Morris. She unfortunately can't join us today. She's at home with a migraine, the poor love. She suffers from those regularly. Anyway, the very first episode was talking to this problem that I just described. It's about why profitable businesses fail to build wealth and how to change it. And let me just pull up a very quick slide as a visual. And then we can just talk about what that was all about. Can everyone see that? So Profit First is a methodology developed by Mike Michalowicz. As you can see, he published his book in 2017. And for all the accountants, finance people in the room, this will be basic, but it's basically where you say this is your total revenue that you bring into the business here in all the different colors. It's about every time revenue comes into your business that you allocate a portion, a percentage into these different buckets, so to speak. And the profit first methodology is you should always putting some into the profit bucket. Then you obviously need to pay yourself. You've got to pay your super contributions, depending what they are. And then you've got tax and your operating expenses. Now, these obviously will differ for every business. And this was a little tool. I'm loving AI, of course, but I said, can you create me a tool with sliders that actually adjust the percentages for me, and I can set up a spreadsheet? Because a lot of my clients and I, we do this manually in a spreadsheet. We just decide what the percentages are, and then we, every time money comes into their business, they will allocate it across these different buckets. So very, very basic, but it blows my mind how few people are doing this, and therefore when they get a tax bill, can't pay it, can't pay their super, don't have any profit. I had a guy making $300,000, and he said, I don't know where the money goes. I barely have enough to pay myself, and so we worked with him on the profit first methodology. Now he's going on holidays and really enjoying the fruits, and obviously investing as well. So unless I'm just going to, that's enough from me on profit first, because we all just get a couple of minutes each to do a summary of our section. So I will hand over to who was up next? Hang on. It's Rachel. Over to you, Rachel.
Amazing. Thank you very much. And I will try to be brief, but I'll just share my screen first. Yeah, Dee's laughing. You're on mute, Dee, so you can't laugh at me trying to be mute. Trying to be brief.
Yes, it was a bit of a chore explaining to a few people at this.
We're all in the same boat, and we're laughing with you, not at you.
Okay. Well, I will try to be brief, and I did sort of break my discussion or my podcast down as a guest to sort of 3 brief notes, and it really does tie in with all the other amazing experts on here in underpinning business or personal, employment profits or surpluses to wealth creation. And the 3 big ideas to take away really come down to structuring. And as you just saw in the Profit First presentation before me, the tax component can be a big influence, but then also the longer term influence in regards to estate planning, super retirement, all those sort of things. So when I'm talking about structure, let's think about what you're trying to achieve. Let's think about what's appropriate. And if you're in that sort of sweet spot we spoke about in the podcast around that 75 to 135K revenue, and you haven't changed or reviewed your structure in recent times, then let's have a bit of a review. And whether that's with your self-managed super fund expert, whether that's with your financial advisor or your accountant, it's a really good time to review and see if you can create some more efficiencies in your structure. The other thing that comes across a lot is, people trying to beat the system or trying to move away from the system and all those sort of strategies that you might hear. What I like to do, and I didn't put this word in here, but I like to leverage the system. There's so many amazing tools out there that we can use to leverage and really support business owners, wealth creation and entrepreneurs. And things like trusts and companies, even with the federal budget announcements and changes, are really amazing tools that can help you retain more funds, minimize the tax legally, and help you create intergenerational wealth, create protective structures to protect that throughout your legacy, and also minimize impacts of other types of indirect taxes, capital gains, and stamp duty. So they're really great tools. And a lot of business owners are working so hard in their business, they don't have time to step away and look at the holistic view and what their future and wealth creation strategy is. And sometimes that's one of the most important pieces, so they remember why they're doing what they're doing, and actually having something to show for it at the end. Now, underpinning all of these scenarios and all the experts here, I feel comes down to people's behavior. All right. So behavior does drive outcomes, and we always come back to cash flow. Profit first, cash flow. We talk about investing, cash flow. Retirement's all about cash flow. And the biggest killer that I see a lot when people start, particularly if they're starting businesses, they're treating their business revenue as personal spending money. And it's not about restricting your personal cash flow. It's about setting it up strategically so that you're not actually killing your ability to create wealth or end up with an unexpected tax bill. And the biggest piece in there, especially with companies these days, is Division 7A loans, essentially where owners take out income, or sorry, not income, but they take out money from their companies. There are impacts on that. Your accountant might be sorting it out at the end of the year, and you might not realize how amazing job they've actually done. But essentially, it does have a bit of a killer on your cash flow. There's unintended consequences with interest and repayments. And also looking at new legislation that's come in around directors' penalty notices. So these days, it's very difficult for directors to be obfuscated from their responsibilities when it comes to compliance with GST, super, POIG withholdings. All those sort of areas now can be directors can be held personally liable. And if they don't deal with this immediately within 21 to 28 days, depending on when the notice comes in, they personally and all their personal assets are at risk of having to sort them out. So let's think about behavior. Let's think about cash flow. Let's think about creating a strategy that works so you can still use funds to create a comfortable lifestyle for personal lifestyle, but then also let's create wealth for the future in a tax effective and wealth creation style. So that's the main part of it. Was asked to sort of put in a little bit of a profile about myself just to remind people, chartered accountant background. My mission is to really help with financial well-being. For me, financial well-being underpins almost the essence of us thriving in this world. And that comes around being able to choose what you do, when you do it, how you want to do it, and having the freedom in that capacity. And especially as we, go on in years, we want to make sure that we can still afford to do that and not be stressed about putting food on the table. And now's the opportune time to do that. What I have been working on too is to create more of a community. I've got a QR code there as well, and I'm calling it the Financial Wellbeing Academy. And this will encompass all types of financial wellbeing attributes, and whether you're just starting out or you're actually a wealth creator already. So I'd love for you to use the QR code there to join up. It's in pre-launch phase, so we're starting to add content and start to build out a lovely community there so we can all support each other with all our amazing experts as well. And yeah, introduce you to wealth creation and not spending your money in a way that doesn't produce long-term support for you financially. Was that brief enough?
You did good, girl. You did
Thank
good.
you.
Well done.
There you go.
So that was, from creating strategic structures for long-term wealth. Next up, we have SMF's Decoded: When and Why to Become Your Own Super Fund Trustee with Natalia Clack. Over to you, Natalia.
Thank you, Kate. Thanks a lot. I will be short and sharp. This is how we usually operate. We do everything quickly and efficiently, but my slides, I've got a couple of slides as well. So first of all, why SMSF? It's one of the most exciting and spoken about topic in the media as well, but why? So first of all, we have to understand that for a lot of Australians, it's the largest asset outside of family home. Sometimes people don't even have a family home. As we know, a lot of people are renting, especially younger generation. They can't even afford to buy a family home. And I don't see it improving. I actually see it's going to become more and more common. People don't own their own home. That's unfortunately reality. However, because superannuation is compulsory in Australia, which is great, and it's been compulsory for more than 30 years, everyone should have superannuation because it's compulsory, and it will be somewhere in regulated superannuation fund, could be retail or industry superannuation fund, and there is an option to set up your own superannuation fund, which is called self-managed superannuation fund. Why people set up SMSF? There are three main reasons. Reason number one, you can invest in the assets which you cannot invest in the industry or retail superannuation fund. For example, property, bullion, cryptocurrency, loans, and much, much more. So this is what you can do in the self-managed superannuation fund. And you cannot do it in the industry or retail superannuation fund because you cannot control where the fund managers invest your money. You can choose a risk profile, but you cannot choose your investments. The second reason, obviously, when you invest in asset classes such as a property, crypto, or bullion, like I mentioned before, you can choose your risk profile. So it means potentially you can take more risk if you have this appetite and make more money, much more than in the industry or retail superannuation fund. Again, it's a control. It's a second reason for SMSF is control. And the third reason is tax, especially after the budget announcement a couple of weeks ago. The SMSF is most tax efficient structure in Australia. You can't get any better than in SMSF in terms of paying a low tax. Maximum tax you pay is 15%, and potentially after you retire, you will be paying zero tax. That's important to understand as well. However, with this opportunity come responsibilities for managing your own SMSF. Responsibilities as a trustee for SMSF, which everyone who set up SMSF has to understand these responsibilities. Second is understanding the rules and regulations, and they are quite complex. There is CIS Act, CIS regulations, and without understanding it, it's very easy to make mistakes. Mistakes are costly. Each mistake can cost you up to $20,000 in penalties. So you need to understand when you're setting up SMSF, it's not only about the structure, it's also understanding the rules. And this is how we work at Easy Super. We set up a structure, but we also educate you on everything you need to know about self-managed superannuation funds, how to manage your SMSF, what you can do, what you cannot do, how to stay compliant, where you can invest, and what strategies, tax strategies you can use in order to grow your wealth. Utilize the structure. Make sure that you use every single opportunity to grow your wealth. Like Rachel said, it's your responsibility to look after your older self, and to grow your wealth. It's not the government's responsibility. It's not your husband's or wife's. It's your responsibility. And we truly believe in it. And we truly believe in empowering people to do it in the efficient way, which is a self-managed superannuation fund, and a legal way to reduce your tax potentially to zero. So we obviously have, let me just get to my slides. We offer the free strategic call. This is where we sit down with you on Zoom and we chat about your superannuation. We ask you what you want to achieve, where you want to go from here, and we explain you the process, how SMSF works, and what your options are. So this is your opportunity to talk to the expert. Usually I take on these Zoom calls, and I have 22 years of experience in SMSF space. So I know everything about SMSFs. I don't do anything else. I do SMSFs only, and I will be happy to share my knowledge and information and empower you to grow your wealth. That's it from me.
Thanks, Natalia. Well done.
Thanks, Natalia. Awesome.
And just clarifying on that, because yeah, superannuation has been compulsory for employees for over 30 years, but sole traders and partnerships have never been required to pay super, right? It's not an obligation. It's not a legal obligation. That's correct, right? Because I just suddenly when you
It is.
Yeah.
They should.
Yes.
It just hasn't been enforced in a
That's
way
right.
that ATO doesn't impose penalties, etc., etc.
Yeah.
But they definitely should pay themselves
They
superannuation.
should. Yeah. What I
But
see
there
is
are
50-50. Yeah.
Yeah, there are options how people can boost their superannuation savings anyway. Just think about it. It's a vehicle where I pay minimum tax. And so instead of paying 47% tax or 37% tax or whatever you pay outside of super in your own name or even in a company, you pay maximum 15 in SMSF.
Yeah, it's much better. Yeah.
Yeah.
I think it's just people don't know, do they? And I find with a lot of the sole traders and partnerships, they just don't, super is not even on their radar, which is where they're falling into trouble. It's a behavioral problem, isn't it? Which we're trying hard to change. But okay, let's go over.
Yeah.
So I've got the lovely Mia Shilkin up next. Beyond business, building wealth through property.
Hi, Kate. Hi, everyone. Lovely to be here. Thanks for having me. I have a slide also. I was asked to speak a little bit about some of the, and hi, Natalia. It's really lovely to share this workshop with you as well. I've heard amazing things about you and I've seen you doing wonderful things. And I think super,
Thank you.
not just because of our recent changes, but just in general, is a really, really untapped and unrealized asset class. And it's interesting because I've worked 15 years now with investors, and the amount of people who run their own businesses that go, oh, I don't pay myself super, like it's a good thing. And then you go, oh, good, what are you retiring on? Oh. So yeah, it's a very interesting one. And I was asked to speak a little bit about some of the budget changes and then just about some strategy behind property. And one of the things I'll say is that it's amazing that super hasn't been touched. And I think that it's really good because it's going to start driving people towards realizing what an untapped resource it is, because it's one of those things people don't even know really the difference between having your super fund and having an SMSF fund. Quite a lot of people, everyday Australians that I come across, we're really lucky to be in this room together where we've got so many people who are so passionate about helping people with their finances and also educating ourselves on it. So we do know, but I think that there is a gap and people don't realize super is just something that they think about, a long way down the line. So my background is working in drug and alcohol counselling, DV, all of that sort of thing, many, many moons ago, many hair colours ago. And I segued into real estate in my late 20s, and I've been there for the last 18 years, 15 working just with investors. And I still don't actually think of myself as an expert, but I do know quite a bit about property. I've been working in all the markets of Australia for the last 15 years. I'm going to just bring my slide up as well. It's book. And all the technology, everybody. So one of the main things I really want to reiterate today is that we don't need to panic about these new concepts or rules. I mean, some of us here are old enough to remember the first time that this happened, and it was in for a period of time and then they reversed it. We don't know what's going to happen, but it doesn't actually matter, because what we're looking at is a case by case basis, whether it's new rules brought in by the government or it's new life changes. Every single investment client or every single investment strategy needs to be what suits them and not what's the noise in the marketplace, not what's going on, all that sort of thing. I put together the slides that the incredible Dee and Kate asked me to, but this is not an education session on anyone watching's own personal situation. Everything is very specific. Not all of this applies to everybody. It's just an across the board section. And I've got another slide that will have, well, there is a QR code down the bottom of this one, but I've got an even bigger one on the next one. But it's just about not buying into the noise. And I've had a couple of examples where I've run clients. We're right in the middle of negotiations on different properties, and I'll say to them, we've just got some new rules. What do you want to do? Nothing. We're going to proceed as planned, because their entire strategy is not about negative gearing. They are not buying their portfolio just to lower their tax. They've got much bigger ideas and goals in place. The strategy is far beyond just negative gearing. It's a whole heap of different options that we put together. And also, as Natalia has mentioned, self-managed super hasn't been changed by these proposed changes or legislation. So that's a really good one. So there are behind the scenes benefits. Obviously, on the face of it, it isn't great for people who are right in the middle of buying established property, because as of the 12th of May, they're no longer going to get all of that negative gearing. There are people within the real estate industry that this is really going to affect, because at the risk of using a bit of a weird colloquialism, they are one-trick ponies and they only have one asset class that they concentrate on. And now that the rules have changed, they don't know what to do, because that's all they've been hammering home is just negative gear, negative gear. And that is not the only reason why we buy property, people. In fact, it's like well down on the list. Just the negative gearing aspect is not. And it hasn't been taken away from newer properties, from new builds as well. So that is an option. When you're combining a new build property with a self-managed super option, you need to change the contractual structure. You can't do a construction with two contracts. So you can't have a land contract and then a build contract going into your super fund. But one of the things I've been working on for a very long time is getting these brand new properties that are superannuation compliant, self-managed super fund compliant, to be packaged up and put into the super, so that we can actually have brand new builds that are compliant with the super fund, that are going to do the negative gearing, the capital growth, all of the good things that we like, and it's safe there. And after your retirement age, you're not getting taxed as much. So I'm actually really blessed that I'm speaking after Natalia today, because she's done half my job for me. But all I really want to reinforce is, because I've seen a lot of panic and I've seen a lot of anxiety and a lot of stress, and you know, my fellow experts today potentially have had some of those phone calls as well from people just wondering what on earth is going to happen. And I think the best thing to do is just remember that if you have the right people working with you and you have the right guides and the right structure, there is potentially a bit of a pivot needed, but we're all going to be okay as long as we make sure we take a breath and educate ourselves, and, you know, go to people like Rachel who can help us with these really detailed structures. And, you know, having all these different asset classes. Property is my specialty and I love property. It's been my go-to from a very, very early age. It was my first lot of investing that I ever got into. And I feel it's like putting on an old pair of boots, comfy, works well. But there are other asset classes, and that's when, you know, we have our super fund, we can put in our bullion and we can put in our crypto and we can put in our property and we can do really, really great things. So having the outside super components changed, yes, definitely has had an impact. But what I'm really excited about is seeing the business owners that I've been working with. Yes, maybe we have to do things a little bit differently, but in doing so, there's potentially a way to get people's businesses working more efficiently and doing what they're supposed to do financially. Prior to these changes, I'd actually implemented, some of my clients coming in would get help from a business coach as well, because we'd be looking at the different entities that they could be purchasing through, and they own businesses, but they're not working to their best capacity. So having somebody there that could help them then opened up that option to be able to purchase through their businesses as well as through their own private name and through, a self-managed super fund. So my next slide, there we go. I did promise a much bigger QR code for those playing at home. Here we have it. And if anybody wants to actually see how this will affect them directly, you can book in with me directly and we can have a chat about your specific situation. But I, again, am being brief today. There is a lot more to talk about, but it is very specific to people's goals and where they're at and what their current portfolio looks like, or what they were looking at doing and now how those changes might affect them. But there is a way to invest. We haven't had things taken off us to prevent us from having the lifestyle and the retirement that we not only deserve but can create. I just think we need to be a little bit more strategic. And the business name that represents me is Miyakaza Property Investment Strategy. So I have it in my title and I'm here to do it. So thank you, Kate and Dee, and everybody else for inviting me to come along today.
Thanks, Mia.
Yeah,
Well done.
thank you.
Perfect. Yeah, it's nice to see those new rules explained like that. So, yeah, thank you so much. Now, given, theoretically, we've all got an SMSF set up, which means we can invest in different assets. And one of those exciting assets on the horizon is Bullion. So I'm going to invite Carmel Pavan, who's from As Good as Gold Australia, to give us an overview.
Just on the agenda, you had Jeremy before Carmel.
Oh, gosh, I did too. I'm sorry.
I was just letting you know because I've got the agenda over here and I'm just keeping an eye on it for you.
I have too, Dee, and I completely skipped forward. I apologise, Jeremy. So should we do Jeremy first? No? Yeah.
Yes.
I'm sorry, guys. I should follow the agenda, shouldn't I? That would help. So
I was just being gracious.
Thanks, Jeremy. Thanks for working with us. The brain's a bit fuzzy on a Saturday morning. So Jeremy is from Boston Trading Co., an expert in ETFs and alternative assets. And if you haven't listened to the conversation we had with Carmel and Jeremy on the on the podcast, highly recommend you do. Fascinating insights. So I will hand the floor to you, Jeremy.
Okay. Thank you. I'm going to be try and be super quick because we've had a couple of people go over. And so I'll just say that I'm the oldest person in the room. I've got a lot of experience in a lot of markets. I was around in the stock market as a baby financial planner before superannuation even came in. That's how freaking old I am. I was around when the interest rates were 18% when you were buying property. And of course, no one was buying property. So I've seen a lot of the market cycles. It's a good time to buy a property, obviously, when the interest rates are low. It's a bad time to buy a property when the interest rates are high. Stock markets and property markets run counter-cyclically. And so I'm looking at basically being in the right place at the right time. And if I can just give a couple of quick tips. Number one, I wrote a book 20 years ago, and we've just done the 20th anniversary edition. And in that time, not one word has been changed. So if you get the book now, it's still exactly the same word for word as what it was 20 years ago, because it's timeless. It's learning about market cycles. If we have a look at, can I share? Is that possible?
Yep. You should be able to share your screen, honey, and show the entire crowd your slide deck.
Yeah. So can we have a look at this? This is a gold price and silver price. So you can see there, it's pretty well flat for about 10 years. It jumps up, it's flat for about 10 years, and then it massively jumps up. Same thing with the silver, flat, 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 jumps up, flat, 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 and then massively jumps up. So we see these cycles coming in where, there's a period between 1992 and 1999.
Jeremy, can you put your slide back up? I hardly got a chance to look at it, my little
That's okay. You can watch it on the preview, on the, what do you call it, on the recording. I'm trying to go fast. I'm trying to go fast. Okay. So a little bit about me. Again, watch that in the recording. Market cycles, being in the right place at the right time. Having a look at, there are alternatives to metals, because you don't just have to have silver and gold under your bed. You can actually buy stock in the mining companies. And sometimes when they're mining for gold, they might accidentally find diamonds, or they might find coal, or they might find platinum or something like that. So diversifying, being in different things, and finding out when's the right time, because no one would have wanted to buy silver and sit flat for 10 years and then sell just before it boomed. Same thing with real estate, same thing with stocks. No one wanted to buy just before it took off and before you missed out on some of those gains. Like some of my success in the stock market, I've made 700, 800% on having stocks at the right time. And then I've avoided the losses by pulling out of the market before 9/11, pulling out of the market before the global financial crisis, pulling out of the market before we had the pandemic crash. I was out of the market 6 months before that. So again, watch the recording, get the QR code. We provide a lot of training on market cycles, stocks, shares, property, and crypto. There's videos, there's free books. I'm not selling anything. Just want to get as much information into your hands as possible in a very quick space of time.
Yeah, I'd love to. Is there a direct link to your book that you could put in the chat for it?
If you go to bostontrading.co,
Yeah.
scroll all the way down the bottom, you can actually get a free copy.
Yeah, okay. Right.
So,
okay. Who's taking your money? Stay. Yeah, got it.
Yep.
Okay, great. Good tip. Okay. Definitely
And that's
sign up
one
for that,
thing
everyone.
I'm going to comment on in overall, Jeremy, one of the comments that you make is getting out of the market before something happens. And I see this constantly as a crypto expert. People don't take profit. So they sit on this stuff and they look at it and wonder why they miss each of these cycles. It's because they're not trained or educated to take profit. So we'll talk about that another time, but well done, mate. Thank you for being short and sharp. Much appreciated.
Yeah. Well done. And yeah, they can listen to the podcast if they want a more expanded view on that. But yeah, thanks, Jeremy. So over to you, Carmel, expert in bullion.
Thank you so much. Lovely to be here. Thank you, Kate and Dee. Dee and I have known Dee for nearly 2 years. We've had events together, webinars, and I'm sure we'll do more. A couple of other familiar faces in the room. Rachel is also was the co-founder of Wealth of Women online club, where I had the privilege, absolute privilege, of being a brand partner. So I'm the general manager of As Good as Gold Australia. I'm just going to share my screen. So again, being as brief as possible. You can all see my screen? No? Okay, sorry about that. Technology, as they say. We are both retail.
Still can't, yeah, it's just coming on now, just a bit of lag time, sweetheart. Yep, you're good to go, darling.
So we're both retail and investment. Basically 18 years we've been in the business. We've been voted the most trustworthy in Australia as a bullion company. We sell and buy, mostly sell, gold, silver, and platinum. We also own a vault as well. It's based in Adelaide. We're the largest bullion company in Australia for physical gold, silver, and platinum, bars, coins and rounds, and we do specialize very much in education, helping clients essentially with their investment portfolios to invest in the mid to long term. So it's basically mid to long term wealth preservation strategy, and we don't look at it as when you actually need to trade. So that is another great benefit about the locking in bullion. Currently we are in a consolidated pullback. We saw the highest on record price for gold and silver in January, the end of January this year. Then we've had this with kind of essentially a pullback. We are now getting ready to see the next major increase. Many issues around the world globally, fiscally, do affect the price of gold and silver. Right now, so we always talk in ounces, and spot price is on our website and many other websites. The spot price is actually the raw, if you like, and we sell the retail product. So then you can see the margin that is also added there. So gold at the moment is 6,320 Australian dollars an ounce, and silver is an incredible opportunity right now. It's actually around $104 an ounce. So what that means is that there is a great opportunity, and we really do a lot of education in the reasons why. Essentially, there's a huge demand for silver. It's used in many industries, technology, also in the military, the US, for example. So the supply is lower, the demand is higher, and we're looking at the next major up curve. Gold and silver bullion, well, it's real money. It has an incredible history like no other asset. Over 6,000 years it's been trading. We, of course, talk about creating long-term generational wealth, not just in your self-managed super funds, which many of you have touched on, but certainly for your own personal. This is an interesting one where gold has increased on average 33% over the last 5 years, and silver has increased on average 31%. So as a return, that has been quite consistent. So I'm looking at it from the last 5 years. We look at it in the last month, the last week, 5 years, 10 years, etc. But you can see, as Jeremy pointed, thanks for showing the chart there, Jeremy. There is this, it's an incredible space to be in at the moment, and will continue as we hurtle towards 2030, the great financial reset. So in a nutshell, bullion provides stability and wealth preservation. We call it insurance against the devaluing fiat currency. And fiat currency is our currency that we use for trading. Bullion is really worth considering to diversify beyond your traditional allocations of property, equities, private ventures. So diversifying your portfolio, you can buy bullion anytime. There's any amount from a very small amount to a larger amount. And what's great with bullion is there's no other cost. So there's no GST and there's no other cost for bullion other than if you choose storage. And as I mentioned, we have vaults available. You can store at home. You can store on your own premises. And for us, the big one, and we're seeing SMSFs, there's a major increase and the trend is continuing for clients to purchase bullion in their SMSF. 2 weeks ago, I went to two budget briefings, and the overarching headings was basically self-managed super funds are the winner. So the tax breaks, as Natalia mentioned, the advantages there. Self-managed super funds, definitely considering once you set up to purchase bullion to diversify. It's very easy to purchase physical gold and silver. We just basically discuss with me, and we will apply discounts as well. There's bulk discounts, so the more you purchase, the higher the volume, the greater the discount, and we love that. As good as Gold Australia being the equal third bullion company, we actually have our own products as well as Perth Mint, which all bullion dealers do sell, and we talk about purity. So purity is 99.99. That is the highest quality of bullion which we sell, and it's interesting because Victorian gold is the third highest purity in the world, and Australian gold and silver is very, very sought after. So we talk about absolutely being in control of your financial future and creating indestructible wealth. I love being in this industry. I am the general manager based in Victoria, or Melbourne. Our head office is in Adelaide. We have clients all over Australia where we deliver the products directly, and it's guaranteed delivery. So for 4 years I've been in this role, but for 6 years before that, I was actually a consultant. So I have been talking and educating to thousands of clients about the value of bullion, why to purchase, and how to diversify. So for me, it's such an honor to be part of this industry. There's my details there. So we offer well, it says a complimentary SMSF consultation. So I take you through the process because I have an SMSF for a number of years. Hopefully the QR code is there to scan. But also if you just want me to answer any question about bullion, would love to do so. Definitely available. And we just, as a side issue, we do partner with quite a number of SMSF tax accountants all over Australia. So we do have a great referral partner as well. I'm also launching a podcast very soon. We're doing a pre-launch next week. Precious Metals, Precious You. And some of you beautiful people, I might actually ask if I can interview you because you're such a wealth. So that is my brief presentation. Thank you again for allowing me to present and be part of this.
Thank you, Carmel. It's wonderful to have you here sharing all your amazing knowledge. Appreciate that. Dee, last but not least, and short but sweet, my friend. That's the challenge.
I can make this very short and sharp. Just with regards to it, I'm Dee from DigiSecure. I'm a crypto consultant and have been for a long time now, been in the industry since 2017. One of the things that we note the most in anyone's crypto journey is the lack of foundational skills that people have. So I'm going to run through a very simple checklist, and these are all the things that you actually need to have in place prior to getting involved in crypto. So I'm going to simply share my screen and run through that for you. Let me just do that right now. Done. Everyone can see my screen, I'm assuming?
Yep.
Done. So these are the things that people don't do. And quite often we have to, I'm just trying to move that. Great. These are the things that we want to get sorted in our crypto checklist before we even start down it. If you've already got existing crypto, you may want to consider some of these things. There's just 10 questions. You need to be looking at an encrypted browser and making good use of that. If these terms don't mean anything to you, please reach out and I'm happy to explain when I have more time. But you need to be using an encrypted browser, and that is not just for crypto, guys. This is for opening up your banking apps, opening up your self-managed super fund documents, anything that's involved in your private life. You should also be using an encrypted email, and no, that does not include Gmails, Hotmails, Yahoo mails, etc., etc. It should be an encrypted email with the suitable security settings. You definitely need to have a multi-device authenticator. You need to know what that is. They're not all created equal, and I will say Google Authenticator is not one of them. Most people have either Windows or a Mac. A few of us will have Linux. They need antivirus protection. When you purchase an Apple, it's quite often assumed that they have way better security. Yes, they do, but they still get hacked. Let me be very clear about that. So you do need to look at antivirus protection. We also need to be taking a look and understanding the tools, which include a virtual private network or a VPN. They can be invaluable for various things. I don't have the time to go through that today. The other thing that I see is secure password protocols sucks. Most people are not particularly good at this. They will have one password with a few variations, usually held in their head or on a bit of paper in the office. Or they've used their current dog's name, the street address, whatever the case might be. So let me be clear, we do have a very strict password protocol that we teach, educate, and train you on. The other thing is understanding bringing money on and off and how that affects you with regards to minimizing your tax implications, etc., etc. So we do show you how to use exchanges or brokers or other areas of bringing money in and out. The other thing that we need to cover off is you do need non-custodial wallets. These are also called hot wallets in the industry, and they are connected to the internet. And we only use those for pass-through. We do a transaction and we get the hell out of there. The next thing is the use of cold storage. This is where we actually store our assets. Our recommendation now with AI and all the fabulous things that are happening in that space is we actually recommend using 3 cold storages. One for a self-managed super fund so that it's totally transparent for your auditor. Everything's recorded and everything's neat and tidy in there. Secondly is for holding, for your long-term holding amounts. The third is for a transactional wallet where you actually do transactions in it or you do test things in there. We've got some other strategies as well. And the other thing that I see constantly is scam awareness training. I do not know how many calls I get every week of people in tears that have lost large sums of money. And generally, the fault actually lies with them, the operator. So these guys are super sophisticated now. So this is all very, very simple. If you've answered no to more than 3 of those questions in there, we do need to chat. My QR code is sitting up there. You can see it like it's big. If not, you can find me on the website or one of the partners in here will have my contact details, but I'm most certainly available for that. I've had the benefit of having a meeting with Michael already. Ali is a previous client of mine. We need to reconnect shortly. I work closely with all of you as you are part of my resources centre. That's it. I'm done. How'd I go?
Yeah, well done. So we'll open the floor now for a live Q&A until for the next 40 minutes. We do have some questions sent in by people sign up for the replay, but I'd love to open the floor to Ali or John. And I'm sorry, John, your wife's name? Oh, you're muted. There we go.
Lucy.
Hi, Lucy.
Hi.
Sorry.
Okay.
So, Lucy, John, any questions that you have, we welcome you to
And
ask them
Michael,
now.
pipe up too. You're involved in
Michael,
all of this too. You wave your
Olivia,
hand if you need
even.
to ask anything, love.
Well, there's a lot of really good quality information being presented, and of course, I'm going to sit on it and sort of come up with questions. I can relate with Carmel's conversation because being a jeweler for the last 45 years, I understand gold and silver. My questions would be in a self-managed super fund, you'd have the issue of capital gains as well as tax, given that you're going to be buying at a really nice low price, and then of course wait until the curve swings up and then you have gains. That would be a question mark. But then, of course, that would be a private consultation. I don't know what questions I would have right now, specifically.
Mhm.
I think I might have to just sort of cogitate.
Yeah, there's a lot of information we presented across a broad spectrum of topics, so
Yeah.
that's completely understandable. Yeah. And I love
I
how Dee
can
said,
cover.
that's it. Dee said, that's
Sorry,
it.
Kate.
That's it.
Yeah,
Oh,
I can cover John's question about the capital gain quickly. So your maximum, you pay 15% tax on capital gain. After 12 months, it becomes 10%. And after the age of 60, potentially it's zero. So if you buy, say, bullion, for example, if you buy it now, say you're 40, in your 40s, and you
I
hold it,
wish.
I mean, for example, okay, 41. And then you wait until you turn 60 and retire and sell this bullion after that time, you'll be paying zero tax potentially. So there are limits. Of course, the government doesn't want us to have 50 million or 100 million in a super fund, even though I've seen this type of funds. Some people do have, but it's very, very few in this country. Most people would have 1 million or under 1 million. So if your super is below 2 million per person, you will be paying zero tax after retirement.
wow.
That's like the shortest answer I can give. If you have under 2 million per person, right? Not per super fund, per person, and you're over 60, you retire, you pay zero tax.
Yeah.
Oh,
I
I
was
like
just going to
that.
say, I was just going to jump in and say that exactly the same thing. It's good to hear from a tax expert. We do replicate the information. For us, it's a very simple process to purchase and leave it. And again, yes, very important to know that once you retire, you then sell off small amounts. So we wouldn't sell you a huge bar of gold because you have to sell the whole thing. Why would you have, that much currency in what will be eventually a digital account? So that's the discussion that I have, and our recommendation. So you only sell what you need, and fantastic, because it is your retirement savings. That's what essentially a self-managed super fund is, exactly like a superannuation fund. But you are in control and you buy those assets. So, John, happy to discuss anything further. And I love the fact that you probably have handled gold and silver as a jeweler. And I've been told by many people that having gold in your hand makes you smarter and healthier and clearly wealthier.
I'm extraordinarily bright.
Must be. Beautiful. Yeah. How about anyone else got any questions? Ali?
Or just a couple of different people. Have we got time though? Or I'm not sure.
Yes, we have. Yeah, the floor's yours. Yeah, we have half an hour.
Great. Well, for Natalie, if I've already got an SMSF, but I don't really think it's working that well, I don't think he's really working for me. I think there's too many of us. How do I work through you, but I've already got my own SMSF? What do I do?
We are the SMSF accountants, SMSF specialists. So we do annual SMSF tax, accounting, audits, everything. So you can move to us from your current accountant and know that you've been looked after by the SMSF specialists. It's the same, like the difference is the same, like you go to GP, they're generalists, they do a little bit of everything, or you go to the specialists. It's like coming to us. So the process is very simple. We can move you literally in a couple of weeks. We just obviously onboard you, get information from the previous accountant, and you'll be ready to like we will be dealing with your SMSF in a way of educating you, because we are big on education. As a part of your onboarding, you will have SMSF Power Masterclass. It's a 1.5 hours session where we teach you everything you need to know about SMSFs. And this way you will be set for the next 10, 20, 30, 50 years, because this is very important to understand how to run your SMSF, especially how to run it efficiently, so you utilize this vehicle to the best potential. And this is what we are big on. We are big on education, not only tax. Tax, of course, it's important. We do tax as well. We prepare your financials. We will look after your compliance, but we educate you all the time.
So I've already got a name, obviously, my own name. Does that change or?
No, nothing changes. The only changes is your accountant from whoever your accountant now to Easy Super. And like I said, the process is seamless. My staff will look after it, and it takes a couple of weeks to move. It's minimum what's required from you is just to sign the document engagement letter. Obviously, it's official, to be officially engaged to help you, and we will take over from there.
Nice.
Okay, thank you, Natalie.
Sorry.
And just Jeremy, what's your service that you actually offer?
Well, I was going to ask you a question, Ali.
Yes.
When you say your super's not working, I would actually want to say, look, if your car's not working, I want to look under the bonnet. So some people set up a self-managed super fund because they wanted to buy the house next door. And if you bought at the wrong time in the property cycle, you go, oh, it's not working because the property's only gone up by 10% in the last 14 years. But if you might be paying too much tax in your super, maybe you need some blue chip shares in there because those are fully franked or tax paid. So I look across a whole range of things. I guess I've been in the markets for almost 40 years. And my expertise is studying cycles and knowing where to be, not just in my own lifetime, but over the last 400 years of the stock market, over the last 400 years of the property markets, seeing when those cycles are, when there's a war on, when there's high or low interest rates. And you can either be looking at it, and as Dee said before, we pulled out 6 months before the pandemic hit. We pulled out 2 years before the global financial crisis. But you can either be on it and rearranging every 12 months, or you can just go, I'm going to diversify it. I'm going to have property, shares, bullion, this, crypto, and then you can forget about it and you know that you've got all the events covered, because each of those different assets will be good at a different time. So this is something to take offline. You and I can have a quick chat and just look at what's inside of there, find out why it's not working, and maybe you're just too early. Maybe you bought something that's about to take off, or maybe you bought something and you held on for too long. I'm not sure, but we'll have a look at that.
So do you clash then? Would Natalie and Jeremy clash because you both do the same things, or?
Well, I do a little bit of everything.
Yeah.
So,
Jeremy's a generalist and Natalia is a specialist.
Yeah, I'd go to Jeremy for the strategy, right? And Natalia for the execution of the strategy.
Yeah, it's not like that at all. We've all got to touch on self-managed super funds in all fairness, all of us. To some degree, but I'm not the expert in a self-managed super fund. If I want it set up, it will go to Natalia and it will be done correctly and audited by her. Jeremy,
to know what to put in, into the fund, you go to Jeremy, right?
You would talk to the expert. Now, there's different reasons for that. Now, Rachel talks about self-managed super funds because she has to look at them as an overall structure as well. So this is why you've got a room full of experts here that each do something, but their speciality is one thing. So in Jeremy's instance, and I know Jeremy very well, he's been a colleague and a professional colleague and a friend of mine for some years, and he runs a crypto fund. And I can tell you now, that's been around since 2016 and has hardly been heard of. Now, what that is for is perfect. It's actually ideally suited for self-managed super funds where people don't have the ability or don't want to manage their own funds. They just don't want to do it. So they've got to go somewhere. So this is where all these experts are, Ali, and definitely a conversation with all of these experts here are well within your grasp, love.
I have a question for Jeremy. Okay, I'll go there.
Do you want to see the puppy or do you want to see the book?
Oh, no, I know it's a French bulldog.
It's a Boston Terrier. Oh my God.
I,
It's
I
written
know
right there.
nothing. I know absolutely nothing. Now,
Carry on, carry on.
I've been observing, listening to podcasts and so forth by some very bright fellas in the UK. And we're looking at a 20-year property cycle. Are we not, or are we? What's your opinion on that? Are we due for a drop in the property values?
It's hard to say. There's usually a drop, say Sydney and Melbourne in Australia, not so much in Brisbane. Brisbane tends to stagnate. So there's different areas, regional areas took off during the pandemic because they hadn't gone up for about 20 years. And so it depends where you live, that's one thing. But in very, very general terms, property doesn't tend to drop so much because you can't get your property valued 3 or 4 times a day like you can with the stock market. So if you go back over the last 20, 30, 40 years and have a look when we've had low interest rates and high interest rates, sometimes a property will go down in value by 10%, but no one's going to sell. So it just sits flat for about 5 to 7 years.
And
So
also,
inside of that
yeah, and also
generational
Mia,
trend.
Mia could probably put some on as the property expert in here. She certainly, John, could add her angle to it as well.
Yeah. So it's in general terms, but then very specific terms depending on where you live and where you're looking to buy.
Mia, your thoughts on that question, sweetheart?
John, tell me what you're asking.
Are we, as predicted by many people in podcasts, looking down the barrel of a 20-year cycle drop in property values?
My question would be, what cycle are they talking about? Because there is no
Well,
national, it's kind of an
I
unusual
suppose it's a
question.
global, that they're probably talking about the UK and America and Australia. They mention
Yeah.
Australia.
So my focus is property investing within Australia.
Mm.
And the statistics that we have now is that there are not enough homes for everybody that's here already. And we've got more people coming in. And there is lots of doom and gloom. And, the other experts are correct. We can trace markets in general going up and down based on world events. But within Australia specifically, with what we have going on, the property market itself, we are seeing some volatility. I think especially in some parts of Queensland, I've seen prices around the Sunshine Coast and Gold Coast get a bit inflated, particularly Sunshine Coast. There's some unsustainable pricing and sales happening. But in general, the property market itself as an investment is still this is what I specialize in because it's one of the safest ones that I've seen and I've experienced. I think if we're buying strategically, we can't look at Australia as a whole market. It's not a whole market. We have markets within the markets and then markets within other markets. So it's about finding the market and the asset that suits what your goal is. And no one on a podcast can tell you that because they don't know your situation. So it's very much about strategic and specific in advice and direction for you, because what you're looking at buying now might be fantastic for you, but for somebody else, it's a horrendous idea. So it really is about your personal situation, but don't listen to all the noise, because I think if you trace some of it back, you can see that there's a vested interest of why they're sharing that information. Not always, but one of the presentations that I've done, I did a lot of research into what other groups were presenting, and quite often they're presenting marketing that draws you into whatever it is that they are spruiking is the word I'm going to use. It's not a good word, but Jeremy's nodding, so I know I'm on the right track. So whatever they're spruiking, what their kind of thing that they've got their finger in the pie for, that's what they're trying to draw you into. So what you really need is someone who looks at your situation before giving advice. They can't give it general advice because we do not all have the same situation.
Thanks,
So I
Mia.
just
That's great.
I'm
caution
old,
you to be a
John,
bit,
so
yeah.
I'm probably
I'll give you an
older
old
than
proverb.
Jeremy.
I was going to say, never ask the cobbler if you need a new pair of shoes.
Thank you.
Yeah.
Perfect.
So
I get that.
if you,
My concern is that you look at, say, Sydney housing prices, and I don't know how sustainable or how does that figure, and then Is it going to keep going up? I mean, banks are going to keep lending and you're going to start buying houses for $10 million just in a suburban
In
context?
some areas, they will continue to go up. In some
Yeah,
areas, they're going to balloon and come down. Banks will lend if you can show them the right paperwork. They don't care if you get yourself into trouble and you have to eat 2-minute noodles. They
yeah,
will lend you as much money as possible. So don't ever think of that as a benchmark. Um, there is no reason that property is going to drop because we don't have enough of it. However, there are prices in areas that I believe have been inflated that will come down. That doesn't mean the market's dropping. It means that people have been like, our human emotions are messing with the markets as much as wars and, other statistics. People are getting this fear of missing out. There's properties in areas that I was sourcing 4x2s a few months ago, and I'm now sourcing 3x1s for the same price in the same area simply because of the rise. That's in Queensland, that particular pocket that I'm thinking of, but I'm working Australia wide and I'm seeing it everywhere.
Right.
So
Okay.
yeah,
Good feedback, Mia. Thank you very
thank
much.
you.
okay.
Any other questions, guys? I think you've got a few, Kate, haven't you, that have come in?
Yeah.
Yeah, you'd love
Yeah.
to hear from them.
Yeah, no, I was having a chuckle before, Dee, when you said that's it, it's simple. And and I think most people new to crypto would just be like, oh my gosh, where do I start? And that's one of the questions that where are we? Where do I even start if I've never invested outside my business? And that's a general question, but I'd love to hear anyone's thoughts.
Well, sorry, Jeremy, do you want to go?
I was going to say, I love that question because I'm all about the diversification.
Yep, I'll
And you
wait.
meet a lot of business owners who, as we said before with the Natalia, the self-managed super, they go, oh, I'm not paying super because my superannuation is the business. And you might have, Uncle Joe who's built up this mechanics workshop over 40 years. And then when he's 60, he wants to sell it. And tough luck, no one's buying it because you can't buy a mechanics workshop unless you're a qualified mechanic. It's not like a neurosurgeon's going to buy it. And if you're a really good mechanic, you'll just start up a business next door if you're young and scrappy. You're not going to buy his. So diversifying outside of your business is absolutely essential because you can't sell off a part of your business. Whereas if you've got a property, you can take a loan against your property and go and buy something else. If you've got shares, you can sell off 10% of the shares and go and buy something else. Or if you've got a business, it's like a millstone around your neck a lot of the time.
Yeah.
And the right buyer doesn't show up when you want to sell. So you need to have other assets, your property, your shares, your crypto, as well as your business. Absolutely.
Completely agree. And Jeremy, sorry, Kate. I was just going to say, tailing on to that, is what people don't realise is they are their business. So Joe's mechanic, no one wants to go to Joe's mechanics without Joe being there, right? So, there's this sort of loop that we're in and sorry, Kate, to go on.
No, I was just going to say the key message I'm hearing is diversification is key, right? Because then you've got multiple assets that are riding the cycles at different times, but one of them will be performing at any time.
Correct.
Yep.
Sorry, and I was just going to say, and that's where, just jumping in again, but the strong performance of Bullion over the 5 years, we've seen such an increase of people wanting to purchase because it's so simple. It's just you're purchasing a product and it's an investment. We also, you could purchase as an individual, as a company, as an SMSF, any entity under a trust. It makes no difference to us because we are basically selling that product. So I think there's a lot of strength to look at the Bullion as part of the diversification as well, as we've all been discussing.
And I think the diversification is the key part, and that's why it's so incredible that we've got all of us here today, all with different areas of expertise, and all of these combine really nicely to work with each other. I don't think you can have you can't be heavy in one thing.
Yeah. So for someone starting out, who was that? Oh, Lucy?
I think Rachel wants to speak first. I do, but Rachel was,
Thank you. So I know when we hear the word diversification, we think about asset classes and categories and industries and things like that. The other thing that I like to share with people and help them understand when we're talking about when you're starting out is what is the purpose behind the asset class you're going into. And you can diversify between your long-term wealth planning with the super side of things, especially when you go into self-managed super funds. You consider that, just like what Dee was saying about the different types of wallets you're holding, your self-managed super fund wallet your long-term holding wallet, and then your transactional wallet. When you're thinking about investing in long-term wealth planning, you can also consider it in that regard. Well, if I've got more funds available in the self-managed super fund, but I don't need a yield just yet, maybe the gold and bullion is really supportive there. Maybe if you are looking at hodling onto certain types of crypto or Bitcoin, maybe that's where it fits, as long as it's within your investment strategy, which is where you can work with Natalia and her team on. If it fits within the investment strategy and you're in the right cycle of your life at that point in time, it might make more sense to hold them in a self-managed super fund. That's the long-term piece. Obviously, review it as you go along. But then if you want to play with more sort of areas, or you're thinking you need to capitalize and take profit, you might have that more so in the personal, the trust, the company space, so that you are diversified but not too weighted in both senses. Because if you're holding crypto, property, bullion in your super fund, and you're replicating it in your outside of super fund world, I'm just going to say, I was going to say the public, but if you're holding it in that space, you could actually be doubling up. And so I do feel there's also the consideration of diversification across all your entities in the different asset classes, depending on what the purpose is. And the purpose of a self-managed super fund, sole purpose test, Natalie can talk about it, must be for retirement. So I also think that's a really great consideration when people are trying to work out, what do I hold where? And if buying property, the only way they can access a property is through the super fund, but it can support their business from a commercial premises perspective, that could be fantastic. And vice versa, as far as buying residential investment property as well. So
Absolutely.
I think when we're talking diversification, we do need to come back to the why and what's the long-term exit strategy for it. What are we going to use it for? Because that will help determine, do I want to put it into super because it will be tied up in super? Yes, you can exit out of it, but also with the concessional rates that we have, and now with the capital gains tax changing, maybe it is a short-term strategy within the long-term plan of the super fund, because you're going to have concessional rates, but we're going to exit out of it as we get older because the risk is too high, but then we're going to reinvest it into a more conservative portfolio, but we're going to get the benefit of those concessions within the super fund. So when we're thinking about what's the next step, I think it's, first of all, what's my intention and where do I want to be in the 5, 10, 20-year frame, and then speak to your relevant experts on how that might fit into it. Because going into metals for 12 months is probably not the best, in my opinion, way to go when you talk about the changes, unless you know the cycles and you know how to go in and out. But maybe you don't go into physical metals, maybe you go into the ETFs or the other mining entities that Jeremy talks about, if that's your plan. So you've got to look at your time frame, your risk profile, and your long-term goal. And your structure.
Yeah, absolutely.
And your structure.
Hey, what were some of our other questions that we had, sweetheart? We've only got 15 minutes left, so we might want to.
So how much money do I need before I can start diversifying?
Wow, how long
is that just a general question?
Yeah, I guess that's pointing to the question, do I need, what is the first step? Do people
$1,000.
How much?
$1,000.
$1,000. Okay, so you can start diversifying with $1,000.
Yeah, I mean, you're not going to be able to go and buy 6 properties in Sydney and one in Melbourne and a bunch of shares. But for $1,000, you can get into a diversified mutual fund, which is going to have, similar to, everybody's probably got a superannuation statement. It looks like a little pie chart or a dartboard, and it's got a little bit of property, a little bit of shares, a little bit of something else. Because the greatest financial managers in the world, the guys who are managing trillions of dollars, they practice diversification.
Yeah.
So you can get into one of those funds for, I think, a couple of $100 even. I think there's applications like Raise, R-A-I-Z, and Acorns on your phone. So when you buy a coffee for $5.50, it rounds up the purchase to the next whole dollar and puts 50 cents into a diversified portfolio. And over time, like I experimented with that, and over a year or so, I made about $1,000 just on this little app on my phone. So you don't need a lot of money to diversify. There's plenty of applications.
Well, I just took 3,500 out of my little Raise account.
Yeah.
So, and I call it capital rotation. So like we're talking about diversification, but capital rotation is also really important because we've all realised there's cycles. and we are not sure where we are at all of those cycles. So you do need to understand that. But if something is not performing and you can access some of the capital, it may be wise to move that and rotate it to another area. So this is what it is. You've got to have the ability to be able to move that. And
that's Ali's thing too, right?
Yeah.
Absolutely.
So,
And you've got to
liquidity.
have
You wanna move
liquidity. You've got to know what your
Yeah.
liquidity is as well. So there's a whole array of things, and each
Yeah.
of us all here are experts in different areas. But I see this constantly in my crypto portfolios of clients. We have to be rotating on a regular basis to stay in front and to maintain what we're doing. So it's definitely important.
And for $1,000, you can buy gold and silver.
Exactly. You
Small
can buy
amounts.
some gold, silver, and
Yes.
you can, you know, you
Especially
can buy a bit of
silver.
Bitcoin. Like you can do different
Exactly.
things that people can
Exactly.
do. We've got people that are wage earners and they dollar cost average,
That's
and we
right.
will dollar
do
cost
too.
average them into the right places.
Yeah.
So there's lots of opportunities out there. Another question at all, Katie? Oh no, she disappeared. No, she's back.
Sorry, I am here. It's soccer morning, so the kids are looking for their clothes. Yes, we do. We've got what's the single most important thing I should do right now to protect my wealth?
Oh wow, that's a pretty broad question, isn't
Look
it?
at who you're married to.
What was that? Don't get married.
I said, look at who you're married to, but we're going to edit this out.
Well, I actually think estate planning.
Yep.
Right? I think estate planning, corporate powers of attorney, if you've got trusts, if you've got trustees of super funds, trustees of trusts, if you've got shareholders, directors, estate planning, because you've used all this time, energy, expertise to build businesses, build a career, build portfolios, build structures, and then the biggest thing is you lose control of that, or it gets taxed because it's ineffectively structured if something happens to you. And whether that's just, there is a blip and you're overseas and you can't get access to turn something on or off or sign something. I definitely think estate planning needs to be considered in the biggest scheme of things.
Rach, yep, very good point.
Mm.
Yeah. It's very easy to turn $1,000 into $1 million. It just takes a little bit of time and a little bit of expertise. But if someone can take it away from you just like that, then you got to start all over again. So yeah, that's a really good point about the estate planning and the structures.
Was actually.
Great.
Katie?
I think people should start with education, to be honest. Because the most important thing is there are experts, like even like today, for example, in every single area. But again, it's your responsibility to make sure that you improve your financial position over time. And it starts with education. Educate yourself, do your own research. Of course, you have to come to the expert for their advice, but start with education. That's very important.
Yeah. I also think that we talk about education constantly, but going back one step, I think one of you touched on its mindset. Over the 10 or so years I've been in Bullion, the most outstanding psychological mind shift change has been actually, I need to look after my financial future. I haven't done so. I've let it go. I haven't been empowered. I haven't been in control. So starting from making that decision, changing your mindset, not just for yourself or your children, the legacy that's passed on, it is becoming critically important as we face this. I mean, we all agree it's a very uncertain economical background or fiscal background at the moment globally. There's so much noise. There's so much going on. So for me, mindset change, once you decide, you've got experts available, you can do your research and go from there. And that feeling of empowerment is just going to drive you consistently.
Yeah.
We're all on the same page. It's all about the education, isn't it, Kate? It's like, making sure that you're empowered. And yes, you do have experts here to tell you all the things, but that question about what should I be investing in? Well, there are lots of options. Explore all of them and take a bit of everything, because then you've got that extra firepower having a diversified portfolio.
Yeah. And look, one of the quickest ways, if you just wanted to try and dabble, I remember trying and dabbling in crypto many, many years ago because I just wanted to experience it without too much risk. Is just like Jeremy mentioned, there are apps out there now like Raise, which is basically a share portfolio There's managed funds already in there that are all diverse and balanced out, and you can just do $5 a day. You can do $5 a week. And it might not feel like much, but it's very aligned with like the profit first strategy. It's like paying yourself first in a business. We're the last people to pay ourselves, but if you put $10 a day away for yourself, that's the start of you paying yourself a wage. If you want to start investing, start putting $10 a week away, whether it is just in a high interest bank account, or if you want to feel a bit more sophisticated, the Raise apps are really easy. I'm only saying that one because it is quite easy and two people have mentioned it.
And Bamboo is the equivalent in the crypto
so for
space.
crypto, so there's Bamboo if you want to get into crypto. Yes, there's technicalities around the fact you specifically don't own the underlying assets in those classes, but it gets you exposure to it. And it's very low risk when you only have a couple of dollars to spare with the cost of living. However, you are being forward thinking, you are planning for your future, and you are creating a sense where it doesn't really matter if you don't have a structure. You don't need a trust for these or a company for these. It's very small in that regard, but it gives you exposure. You can choose, into the property funds. Maybe we can't get a home deposit just yet, but maybe you are, you want to get exposure to property. There are property funds within these Raise accounts and things like that, and it's $5, right? And so that helps people feel like they're being productive, they're moving forward, they're taking that step while they're getting educated and more sophisticated around what they want to do. All right. So I think to stop people from being paralyzed with indecision, that's probably one thing everyone could get on their phone in the next 10 minutes and actually set that up and just have, whether it's auto feed of $10 a week, whether it's a top up, like Jeremy said, whatever the spend top up thing is, you're contributing and you're adding value to your future.
Yeah, they're great, nice little easy small things that we can do. I set up Raise a few years ago, and that's my holiday slush fund, and Bamboo similar, although crypto's down at the moment. But I've taken profit out of there, and the first time I drew profit was like, oh my gosh, it works,
Don't forget the tax though.
Yes, don't forget the tax. Correct. But if you have a larger sum of money that you want to really use to work hard for you, in that situation, I'd say go to someone like Jeremy. You'd be the strategy man. Is that right in terms of looking at or do you work together with Natalia? Obviously, Natalia would be the vehicle to.
I'm happy to work with everybody, mate. I mean, I love all these beautiful women, and the fact that they're smart too is just an absolute bonus. But I just want to jump on something Rachel said, because there's a lot of people out there who go, oh, I've got to read all the books, I've got to educate myself, I've got to learn all these things, I've got to watch 1,000 podcasts before they actually do something. And Rachel said, jump in and do it first and then learn on the way. Because you can sit down and read an entire book about cars or bicycles, but it's not the same as actually getting in there and feeling it and getting it. So when it's a couple of $1,000s, even if you've got $20 million just sitting in the bank, put $1,000 into something, and then guess what? You're going to start to learn about it because you're going to be motivated about it because you've just bought a bicycle. You want to learn about it. And this is how I got into stocks and shares back in the day, because I had a little tiny mutual fund. I was like always wondering why it sort of went down in the winter time and why it went up in the summertime. It's like, that's weird. And a lot of it was actually Coca-Cola. And it's not just Coca-Cola, because Coca-Cola owns 7 bottled water companies. So the Frentel and the Pump and the Mount Franklin, all this stuff is owned by Coca-Cola. And obviously people drink more water in the summer. And because I had only $1,000 in there, I started to look at it, go, oh, this is how it works. And I'd pull it apart and go, there's Coca-Cola in there, there's BHP. And I started to study the individual shares and the individual cycles on those. So for anybody who's sitting on the fence, don't think you have to learn everything in order to jump in and drive the car.
Learn as you go.
Get on the bike first and learn as you go.
Yeah, great advice. And Natalia, does your company help your clients choose the assets they put into? Do you help with the strategy part?
We don't provide the investment advice.
No.
Investment advice only could be provided, obviously, if you have financial license, for example.
Yeah.
So all our advice, it's education, coaching, etc., etc.
Okay.
So we provide education, but not investment advice. We work with other experts and even the experts in this room as well. And we just educate and obviously provide choices. The choice, and it's very important, especially with your student.
Yeah, got it. Okay. Any final burning questions? How do I know which asset class is right for me? But Lucy, what was your question?
Well, I've got several, but the burning one, I guess, is can you transfer sort of existing bullion into an SMSF? Or Rachel, would you put that, we've had this conversation partly with you, or would that be more trust orientated in terms of, we don't have, like John's 70, but we don't have a super. And it's just sort of, opening up that question, I guess, in terms of where you might put existing bullion.
Yeah, so I mean, this is it depends question, because we're talking age groups too and age classifications. And you mentioned you don't already have super.
Yeah.
So there's a conversation between, if I have an asset and I want to transfer that asset elsewhere, we have potentially a CGT event. However, like a capital gains tax event. And so we need to consider, why would we be transferring it to? Like, when do we want to access it? And even though you might be 70, Lucy, also considering your age and what super you might have, it might be a discussion with Natalia about, can we make this a super contribution? Can we get a deduction for claiming the super contribution? And can we do an in-specie contribution? And so I'm not an expert in the technicalities of the super fund side of things, but there is some really great, amazing strategies you can deploy within your super fund with recontributions to get things tax-free, with different age-based limits. So it's probably going to step back to, what do you want to do with the bullion in the future? When do you want to access it? Because you could do everything at once, large CGT event potentially. If you're moving it into a trust, you have more access to it now. But if you were younger, that would probably be more of a discussion you'd want to have, versus later on when you're a bit older, you might be able to access your super now. So it depends when you want to access it. And so it is more of a bigger picture discussion that we won't have a clear-cut answer, but it also might mean, if you want to live off it, selling a little bit, like Carmel said, if we just got an ounce of gold, we might just use it over the year. The capital gains won't necessarily be as much. So there's a few strategies there, depending on what you want to do with it long term.
Yeah, I can elaborate on it, Rachel. I agree with Rachel 100%, but I can elaborate from the technical point of view. First of all, at your age, you'll be paying zero tax in superannuation environment. What it means if it's outside of super, the tax depends on, obviously, if it's in your personal name, you'll be paying marginal tax rate when you sell it. So you have to understand one thing. In SMSF, you'll be paying zero tax. However, you cannot move your bullion in specie into your SMSF. You have to sell it first, pay capital gain, whatever you already accumulated up to this point, then put the cash in a SMSF. Again, we can discuss how you can do it, but potentially, yes, you can. And then invest it in SMSF, under SMSF vehicle, and going forward, pay zero tax. That's, like how I can explain it in a simple way.
Sure.
Plus, because of your age, you can access it at any time. So it means you can access, you need $5, you can access it today. I mean, your superannuation today, and take the $5 out. If you need $1 million, and you have $1 million, obviously, in SMSF, then you can access $1 million. Then you can access the full amount. So it gives you flexibility once you're in pension age. I call it the golden age, because from the SMSF perspective, you get all the benefits and perks of this country and making money. So you pay zero tax, you can access it at any time, and why wouldn't you?
There's got to be some advantages to getting older, right?
Yeah, golden age, I called it.
Well, it sure as hell isn't menopause, ladies.
So everyone, we've come to the end of our time together. I hope this has been valuable. Please, if you have any questions, reach out to the experts. We will send a follow-up email with everyone's contact details to the people that signed up and everyone in the room today, just in case you want to reach out to people directly. But please, we will also send a feedback form if you have any tips for us on how we can make this a better experience next time. But we really enjoyed having you all here, and thank you to the experts for giving your time to us on the
Thank
webinar.
you very, very much, everybody.
Thank you.
Talk to you all
Thank
later.
you so much.
Thank you so much, everyone.